And joining me for a look at the equity space is Wayne McCurrie from FNB Wealth and Investments. Thank you so much for your time, Wayne. Let's wrap up the week, and particularly with a focus on the Rand, because there's quite a lot of strength that's come through to the Rand, and it has been gradual, but really, really nice on that front now, over 18 Rand 60 against the US dollar.
Yes, I mean, it all changed, I suppose, Tuesday, when somehow the negativity that we've had the whole of January and the whole of February just reversed. Yeah. So all the shares that were clobbered, especially the mining shares and especially the platinum shares, all went up strongly, and that continues doing the same thing today. And the Rand strengthened. I mean, the Rand was sitting at 1950, the next thing is 1860. So it just shows you that, I suppose, two things. Sentiment can change very quickly, positive or negative, but it can change very quickly. And the second thing is, hopefully we're going back to the same sort of market outlook or market conditions that we had in December. Because remember, in December, the Federal Reserve Chairman made a speech saying interest rate cuts are coming. Market went up like crazy. The Rand strengthened to, I think it was 1820, somewhere around there. And then it just all reversed in January and February. But maybe with his speech he gave the other night, where he said essentially interest rates are going to fall this year, which is what he's been saying the whole time.
Yes.
That's maybe put us back into the December type of mode. We hope so, because that's good for South Africa.
Yeah, it's quite interesting because it doesn't seem like he's changed much of his language since then. But it's quite interesting how markets just continually receive what he says. Wayne, let's come back home on the JSE. And obviously, we have had a few numbers coming out of the local bourse. We had Impact coming out today with about 3.6% revenue growth in its year end, and 8% growth in its bottom line. Quite a lot of headwinds that the company's been dealing with, including consumer demand, but seeming that their strategy is actually working and benefiting the numbers.
Yes, I mean, whenever you read a South African set of financial statements or whatever disclosures they put out, everyone says the same things. Life is tough here, and we all know it. I mean, we don't have to even repeat it, but this is the same for everyone. And Impact has actually done quite well in this environment to show an earnings increase. So certainly I think it's delivering on its strategy, and it's being managed very well in tough conditions. So, congratulations to them. This was a decent set of results. Yeah.
I mean, just in that packaging space, there's, a lot of people usually talk about Sappi and Mondi, but Impact not really, one where it seems investor appetite goes to quite a lot. Is this a contender in that space?
Look, you can look at it, and unfortunately, the big institutions like where I work, there's very few portfolios you can put small shares into. Simply, you're just, quite frankly, too big. You can't get a decent holding in a small company, and not just can't get a decent holding. If you go in and start buying up a small company, you might create an artificial price because you're such a big player in a very, very small market capitalization. But yes, people must look at this one. They generated very good positive cash flows as well over the time period. So maybe it's something that is unfortunately neglected by the market, and there may be a few niche players or private individuals that should have a look at it.
Yeah. Well, actually, kind of in that same space as Caxton as well. It came out with its interim results today, but its financial metrics were quite, saw some pressure. We did see a downward movement there in revenue, also in headline earnings per share. Of course, they do own a stake in Impact. Now, I'm wondering, what you thought about this kind of divergence between Impact and Caxton, and if maybe it could have an impact on the kind of in the boardroom.
Well, look, there are different companies. I mean, obviously they've got some similar business interest or aligned business interest, but it's still big in publishing and printing, and that's a dying industry. So they say, everyone's pulling back on their printing advertising because of tough times. So the packaging part of the business, as we've been speaking about, has actually done quite well. It was the printing and publishing business that really took a little bit of strain. There's a little bit of distortion in the numbers because of, I think it's a disposed business, or anyway, it doesn't matter. I mean, CTP, which actually stands for Cape Town Printers and Caxton, have been on the market forever. I mean, this has really been listed for an incredibly long time. But, you know, you're operating in a difficult economic environment, same as everyone else, but you're also in an industry that's in a little bit of decline. I mean, when I think back maybe even 10 years ago, at my office, we each got a newspaper or maybe 2 newspapers every day.
Yeah.
We got all the weekly journals every week, all 2 or 3 weekly journals every week. You don't even see them anymore. You know, you won't find a newspaper or a printed weekly magazine in our offices. So, you know, unfortunately, you know, everything's online now.
Yeah. Does this maybe make their move into Impact maybe more crucial at this point?
Yes.
Okay.
Yes, I think so as well. Yeah. I mean, they're obviously trying to realign their business. I mean, there will always be printing. There will always be publishing. I mean, it's not going to die tomorrow, but it is in a decline. And, you know, hopefully they can really mop up that market and maintain margins. But they had to cut back on expenses. It's tough.
Yeah. All right. Well, let's go to your stock pick for today, Wayne. What are you picking?
I'm going for Sasol. I'm going on the back of interest rates will fall, the global economy will recover, there will be more demand for commodities, the oil price will go up, etc., etc. So it's a normal commodity story, but specifically on Sasol, they heavily geared to global chemical prices, and they are in the doldrums, and hopefully they also pick up. And the share has been hammered. So this is a typical value type of recommendation. You know, don't put all of your money into it. Don't put widow and orphan money into it, because these shares can go down for longer than what you think. But I think on a 2 to 3 year view, Sasol shows quite good value at this level. I mean, they can, you know, in good times, they can get 30 more, 40, 50 Rand profit a share. And you times that at an 8 or a 9 price earnings, 10 price earnings ratio, you know, it's a lot higher than the current share price.
All right. Well, thank you so much for your time and for giving us insights on what has moved the markets this weekend today, Wayne. That was Wayne McCurrie from FNB Wealth and Investments.